Hey gang, I got exciting episode for you guys. A session about why the housing market crash economy is particularly going to devastate to millennials and older Americans. So simply put, this collapse that we're having in 2020 is going to devastate two types of people. It's going to devastate a lot of type of people, but the people that are going to get hurt the most are going to be the older Americans and the millennials. And I'm going to get into that right now, how it's going to affect each one of these. And at the same time, I'm going to talk about opportunities in this setting that can benefit both of these subcategories. Now, it's no secret that the market is melted down in equities and it's going to come very soon to the housing bubble. Okay. And the way it's going to affect the older Americans, especially the baby boomers, is because that in two ways. The very first way is in their equities and their stocks. This is the time where baby boomers are going to start retiring, and they just saw massive haircuts in their stock just a couple of weeks ago. But my opinion is this is just a second leg down that we're going to go to, and they're going to even see a more major pain and suffering thanks to the stinky bankers, central bankers, the Fed. So older homeowners, this is their retirement time. They don't have a lot of life energy left. And some of them have built a little bundle nest egg in the equity markets. And now they're going to see those things dramatically shrink and even more. Okay, which is very devastating to them. One great example is I was doing a deal maybe about 4 or 5 months ago, and I asked for proof of funds from my buyer, and he sent me over his American airline stocks, which at that time the gentleman had over $500,000 worth of stocks that was being valued, and he sent me a snapshot, and I thought to myself, that's pretty awesome. But today, I bet you that his $500,000 stock has evaporated so much, and I thought about that today and those guys took massive risky moves to get the percentage that these people needed, and so they're probably lost money and it's probably going to lose. And baby boomers are going to be dependent on security to be able to and Medicare to be able to pay some of their expenses. Okay, especially the rate of printing of money and inflation. However, Social Security itself is going to be in trouble because currently the states are paying tons and tons of money to unemployment because of what's happening around the 2020 with the bug. And on top of that, there's millions and millions and millions of Americans that are not going to work to pay into the Medicare, into the Social Security program, which makes it even a red line, like an engine. It's about to bust, like it's going to explode. Okay. So, again, as you can see, older Americans are going to be in trouble because they're in jeopardy of their Social Security payments, even though they have paid into it. But the system was rigged that they used that person's money to pay someone later. So that is when it's time for that older baby boomer to collect the money he paid into it is not there. The new people that are supposed to pay into it are currently not working, and we're not sure if they're going to go back to work and if production is going to be the same. And on top of that, the states are already paying a bunch of unemployment out. So as you can see, this is a major bad situation when it comes to that. Okay, and there is no secret that the states are in massive debt themselves. For example, California, one of the fifth largest country, if it was a country, because of their economic production, went from being having a surplus, being positive, to in matter of weeks to go negative. Okay, so imagine the states that don't have that kind of revenue, and they're massive in debt. If you guys or gals have any questions, leave a comment. I'd be happy to answer your questions for you. Click the like button. Support yourself by watching. That's all I ask of you guys. And leave a comment. Let me know what state you're in. Okay. So now that's one way that um, homeowners are going to lose because of older Americans are going to lose. The other thing they're going to lose is in their savings. A lot of older Americans may have put money aside into their savings, so they have money into their stocks, which has evaporated. They may have money into their pensions, which is at the risk of evaporating. They may have money into the 401s and other stuff that has lost. But now the other thing that they're losing right now is their savings, because when they have money into a savings account, the Fed, I've done videos on my YouTube channel just a couple of days ago. They said they're going to print out money and they're just going to print out money. Well, what that means is that that person's buying power is going to dilute away. So when they look into their banking account, that elderly couple, they look in their savings account, it still says, the 200,000 or 100,000 or 10,000 or whatever they may have. But when they go in to buy something at the cash register, it just doesn't buy as much stuff that it used to. So that's the other way that the central bankers, the Fed, are giving the older Americans, that the people that work so hard, paid into the system, when it's now time for them to like retire, we're just going to now give them the black eyes and hope that they don't get anything. And I'm sorry to tell it to you the way it is, but that's the way the system is right now. Okay. The other way that older um, baby boomers are going to be suffering and be devastated is that besides their equities, besides their savings, they're also going to be hit in their homestead, in their own properties. A lot of people have bought a house, they didn't refinance or they didn't do all that crazy stuff, and they've been just paying the house down, paying the house down, paying the house down, and now they're thinking the house is worth 300,000, and now with the real estate collapse, with the house bubble 2.0, with the economic collapse, their house prices are not going to be coming down. Okay, so they're going to get two black eyes. One black eyes is in all the equities and savings, and the other one is on their home value if they own homes, and if they have it free and clear, have a lot of equity in it. Now they're going to have less and less equity because of lending practices has gone to more rational, where you need 20% down, you need a 700% credit, unlike 2016, 2017, 2018, where there were changing laws to make more people qualify for a loan. Okay. It's going to be harder to sell a house because the buyers have to have larger down payment, larger credit score. It's going to be harder to sell a home in general. It's going to be harder to get a loan, and the prices of homes are going to go down because there's massive foreclosures that are coming in the forbearance program and the economy as it moves forward. Okay. So now we talked about older Americans and how they're going to get devastated in the uh, housing market crash. Now I want to talk about millennials, because I really feel hard about them as well, because what the situation is that the young generation, some of them have just graduated college. And the cost of college has gone up significantly, right? They may owe $50,000, $60,000 just for a 4-year undergrad. They're excited they're going to come into the job force, and now they're going to get a nice paying job. And behold to their belief, they graduate, or they just might have just recently graduated, and they're going to come out here, and there's so many millions of people that are underemployed, or not employed. Okay, and production has freezed, and people are not producing, and so it's going to be very hard for a millennial to be able to find a job. Okay, the other hard part for millennials is going to be that their salaries is going to be deflationary, so their salaries are going to be coming down, while the price of food and other commodities is going to be going up. So it leaves millennials in a very, very tough situation, because their salary is going to be deflationary. And the reason it's going to be is because, let's say someone has graduated college and they have a job, and now the companies are not producing as much, they're laying off people, and they come to me, and I just graduated and I have all this debt and I have a new car and I got to make this payments, and they said, look, man, we've been paying you 50 grand a year, okay, or 60 grand a year. But we can let you go because we're in a tough situation, but we like to keep you board for 45, okay, or we like to keep you for 40, or we like to keep you for 38. Which one do you want? Okay. And I'm thinking to myself that, hey, if I go onto the market, it's not like 2016 where I could just put a resume and quickly get a job. There's over 30 million Americans all over America that are unemployed, and who knows what's going to happen. And we're about to go into the biggest Great Depression since the 1930s. Okay. So as a millennial, if I don't have a savings, if I haven't invested, or, and I have all the student debt, $50,000, $60,000, so then I may willing to take a lot less of a salary, which is a default inflationary of a salary. But when I go to the grocery store, when I go do specific things, it's going to be inflationary. So it's a double whammy for the millennials in that aspect. Now, um, the other bad news is for the millennials is that majority. All right, sorry guys, someone called in. All right, sorry guys, someone called in. So the other bad news for millennials is that many of them have bought assets like cars and real estate or whatever at the top of the market. Okay, in the past 2 or 3, 4, 5 years, and and they paid extremely high for the assets because of central bank printing of money manipulation, the Fed, and it has caused assets like cars to go up, houses to go up, and a lot of them have bought into these things because that's what you're supposed to do. You're supposed to go to high school, college, buy a house, get a white fence, etc. And so they bought into this trap. Now they have significant school debt. They have significant car debt. They have significant, home debt because they didn't buy these homes at below market or on the market. They played over. There's been a lot of real estate agents that I've unfriended on Facebook because they were recommending to their clients to pay over the asking price so they could get the home because there was too many. It was the seller's market. Okay, where I was like, man, because these people are going to be indebted even more on an amortization, 30-year fixed amortization that's going to suck them up. That $20,000 is going to be like $60,000, $80,000 by the time they pay it off because of banking amortization scam, okay, or scheme. Now, so the millennials are going to be in a tough situation because their jobs are going to be deflationary. They have, they're stuck with the bags, right? They're stuck with all this debt that there's colleges were at the top of the market because eventually if people can't go to colleges, then the price of colleges will come down. Eventually, if people can I just get loans and constantly buy cars, and the price of cars are going to come back down. Same thing with rents is going to come back down. Like some parts of the countries, rents are coming back down. All right. So for the millennials, it's going to be tough because their job's going to be getting paid less, or it's going to be hard to get a job. Okay, Floyd, because there's too much competition. Sorry, guys, I freestyle all this stuff, so that's what happens when you're not scripted. All right, give me a second. Let me fix this up. All right, here we go. Perfect. What happened? Let me turn this one this way. I think this is the way it's supposed to be. There we go. All right, guys. Unscripted. This is what happens. So it's going to be extremely hard for millennials. Um, And the other hard part is going to be that some of them are going to be smart enough to realize, hey, this is a good time to get into real estate, or this is a good time for me to buy a house because prices are coming down, or buy a car. But the problem is going to be at that time that lending is going to be extremely tight. There's not going to be easy credit to buy. So this is why millennials are going to be in a tough situation because assets are going to come down and they're not going to have cash to buy it. They don't have this kind of skills that I'm going to show you right now in a second to get these assets. Banks are not lending out because they're having massive people defaulting on credit cards and auto and houses. There's going to be less job. The jobs that are out there are going to pay a lot less, and the millennials are going to be totally indebted. And some of them have already bought these assets. And they're not positive assets; they're negative assets. They're not even assets. They're an income to the bank. They're debt, right, at the top of the market, and now the market has gone down and their car's not worth what it should be. Their houses are not worth what it should be, and so it's going to leave them in a tough situation, just like older Americans. Now, the people that are going to be printing press, and we have already seen that anyone that can buy lobbyists to buy the politicians to get the loans. Okay, And small businesses are going to be extremely devastated, just like retail buyers, retail investors, and the average American that has a retirement, is older, or is young. Now, the opportunity comes is that many people are going to wake up. Many people are going to realize and put my feet back up, and it's just going to go up. Many people are going to realize that, hey, the stock market is very, very risky. It just doesn't just go up and up and up. Many people are going to realize that this is not a U shape, and that they've been unemployed now. It's 2 or 3 years. They still can't get a job, or other people's loans. Okay, because in this midst of real estate, massive amount of people are going to be motivated, and they're not going to be able to sell their homes because the prices are coming down, because there's massive inventory. It's harder to get a loan, and they're going to be home sellers that have ultra low interest rates, like almost 0%, because in the past few years, we never seen this in the history of America. Mortgages were like at almost 0% versus the last crash, which interest rates were like 6 to 10%. Okay, and a lot of these sellers are going to be highly motivated in the real estate, and they try to hire a real estate agent. They try to sell it, but they don't get a bite, and they can't afford the monthly payments. Maybe they lost their job. Maybe their job is reduced their income. They can't afford that stuff anymore. Maybe they're just like totally motivated because, like, man, they have to have a job relocation. They lost their job and they got to get a new job. Have to be in a different state. They got to move. Whatever the story is, they're highly motivated, and now the opportunity comes is to have the strategy to know what to do with the property as an exit strategy, and also have the strategy of know how to structure the deal to buy it without coming out of money a lot, and without having all the cash, without getting a bank loan, because most banks won't be lending, and to use the seller's OPM, existing mortgage. Okay, all right, why is that so amazing? In my opinion, is because the seller already has a mortgage. They're already qualified for it. They're already paid the down payments. They already paid all the closing costs. They've done all this hard work. Okay, and now they can't afford it anymore for whatever reason. And if you know how to structure the deal, right, you can buy it just for your own personal homestead, or not you, but just in general, that individual, that investor may be able to buy it for a passive income, where they don't have to go get a job. Now they could just do deals where it brings them money, or they could do the deal, what I call pushing paper, where they don't have to buy it. They don't have to have the monthly money to pay the monthly payments. They don't have to have the money for the closing, because all they do is negotiate the deal on a piece of paper called the real estate contract, and then they sell their positioning on that real estate contract to an investor like myself, that's going to be a buy and hold guy, or go to an Airbnb guy, or to someone that's going to do fix and flip, whatever the story may be, and just to push that paper to them. So this is why it's a great opportunity for people that baby boomers, or people that are millennials, because one idea is in real estate is that you can get passive income from an asset, because a house has two things going for it. Number one, it has equity, right? But I don't really like equity, because that's what I call a phantom gain. Unless you know how to cash out, more than likely the bankers will just cycle you in, because they make equities go up, and then when people think they're rich, they suck it out from them, and then they do the same thing, and you can see what was happening with the baby boomers. So that's great, but what I'm really looking for, which is number two, is positive cash flow. So if, for example, I find a motivated seller and their house is worth 300,000. They have an ultra low interest rate, and their mortgage is 1,200 bucks. And I look online, and I see the houses around the area are renting for $2,000. Okay, because it's a 4 bedroom and I can rent it for 2,000 bucks. Or I look around and the apartments are going for more than that, 2,500. Then I said, look, man, the guy's mortgage is 1,200 bucks. I can rent it and get a positive cash flow of 1,000 bucks. So then it doesn't matter if I'm getting equity or not for me, okay, because then I'm having positive cash flow. Now, of course, I rather buy equity and positive cash flow, but in an economic collapse like we're having right now, there's not going to be that many motivated sellers that have equity, nor is there going to be just normal sellers that have equity. It doesn't matter if they're motivated or not, because of what's happened, right? The prices of real estate are going to crash, because it's going to be hard to get loans. There's going to be too much inventory. All these people in forbearance are going to start losing their homes, etc. And so what's going to happen is going to crash the prices, and a lot of people are going to get with their pants down, right? They're going to be like, oh, right? And it doesn't matter if they have 30% equity, because a lot of places like Las Vegas, like Colorado, they're going to see significant losses in their home values because their home values went up abnormally. Okay. And so that said, it's going to create an opportunity for someone that has a skill set to identify what a motivator is, how to structure it to get equity or positive cash flow, and then have the skill set to manage the property, because it does take management. It's like a baby, right? If you're going to go to the route of having passive income and being a landlord, if you're going to go on the route of, you know, pushing paper, pushing contract, wholesaling it, then you're not going to have the managing skills, because you're just putting it under contract and you're deferring it to someone else to do the babysitting for them, and they're going to make the majority of the money. You're just going to make a little bit, but hey, a little bit of 5 grand or 20 grand is better than, you know, getting nothing. In my mind, even at 3 grand, it's better than nothing. Sure, I would like to make 80 grand, but if I could just push some papers and make 5 grand and I don't have to do much besides a couple hours worth of work, then I'll take that any day as well. Personally, I don't like wholesaling, but I wouldn't take it. But I know many people that would love to do that. Okay, I'm a buy and hold guy, and that's what I do. But there are all kinds of investors out there. There's the fix and flippers. They're the Airbnb guys. They're buy and hold guys. There's all kinds of investors out there, and so someone that's pushing paper, wholesaling, then in this market, they're just finding owner financing deals where the seller is willing to become the private bank. A, they have a mortgage, or B, they don't have a mortgage. Either way, they're going to be motivated, and that investor knows how to set up the deals, knows how to find the deals, knows how to structure the deals, and then knows how to do the exit strategy. Now, if you need help in any of these things that I just mentioned, then I have two solutions for you. Number one, you can join my live profit sharing coaching. Okay. Um, the cost is 3K for 1 month of coaching. Um, and I give you $9,500 worth of business tools that you need for your business, from your websites to your marketing materials to where to find the paperwork. I mean, where to find the sellers, the paperwork, how to find the sellers totally for free, etc. Okay, I'll give you all the tools you need. 3K for 1 month. That's the price. Now, if you can't afford that, or you want to do a sample try, then what I have right now is called my pre-recorded profit sharing, which I allow you to get 1 month of coaching. They're pre-recorded for 4 weeks, for just 197. So instead of paying the $3,000, you can learn the same exact stuff that my students are paying the $3,000 to learn. But I'm not going to be live. You're not going to be able to ask me questions. But my students are asking all kinds of questions, so you can listen to them. My students are doing all kinds of deals, so you can learn about how to do deals, how to talk to sellers, how to structure, how to negotiate, so on and so on. And you can get it for like 94%, 97% versus the normal price. So the two option is, you can just download a pre-recorded 1 month of profit sharing coaching for just 197. That's amazing because the price is extremely low. You don't have to share any of the profits with me because it's a self-help course. Or you could join me live and we work together for 1 whole month, and we'll work and do a deal and split the profits of one deal. Okay. 50-50. Okay. So if you're interested in working with me directly, 3K, 1 month of coaching. If you just want to just download a pre-recorded of the same things that I talk into my regular students, right now I'm having a fly sale of the pre-recorded for 197. You're going to get 1 month of coaching. You're going to get tons of stuff. Go to mrnofluff.com, learn more about it. The only catch is, ladies and gentlemen, this only catch is I think I only have 22 or 23 left out of 50. So that's the only catch, because I know I don't have a sales team, and I do that for a purpose. A lot of people say, Mike, I want to join the profit sharing, but I want to talk to you, or I want to, rub elbows with you. And we don't do that because I don't want to persuade anyone to be their dreams. If you can't pull on the trigger yourself, then you have no business being an entrepreneur or a real estate investor. But what I have done is sweeten the tea for you, as they say in Iran, to let you sample the coaching, sample the classes, and you don't have to pay the 3 grand. So if you were thinking about joining the profit sharing, and you didn't want to risk 3 grand, you can pay the 197. Try it out. If you like it, you think you'll get benefit in this course by rubbing elbows with me, be able to ask me questions and working directly with me, then three grand. Okay, if you don't want to, then 197 is all you paid. You have the courses, you have unlimited access to that training course, and it's going to help you. The profit sharing is real. There's no fluff in it. I show you exactly what you got to do to find deals, and a lot of students are very happy in it, guys. Okay, if you have any questions, leave a comment. I'll go ahead and answer some of these out. Let's see if I can get it to work. Yes, what's up, Mike? When do you feel the house market will bottom out? Okay, that's a really good question. Someone asked me, when do you think the house market is going to bottom out? Well, in 2019 is when it started, and it's starting. It's not going to be like the stock market where one day you look up there and there's 1,000 points down. That's the cool thing with the stock market because it's fast. When you see losses, you see them quickly. Real estate is not like that. Real estate may take 6 months of side effect, and it's not going to be like today you go to a house and it's worth, for example, like if you ever bought a house right on the MLS or something, the guy doesn't come and say his house is 200,000. He doesn't tomorrow and says it's worth 100, right? No, he goes like this: it's worth 200. After a couple of months, he may put it $1,000 off. After a couple of more months, he may take another $1,000 off. After a couple of months, he may take $3,000, and after a couple of months, he may take. So it's going to be like that, okay? Um, so I hope that answers your question. It's not going to be a fast thing. When do I think it's going to bottom out? If you go historically, the last crash started in 2006 fourth quarter. Okay, everyone said it was later, but no, it started in 2006 fourth quarter. That's when I saw it happen. I was like, oh, I got to get into real estate. Okay, and then you really saw the pain and the suffering in 2008, 2009, etc. Okay, uh, but does that mean that people were not suffering right at 2006 fourth quarter, 2007? No, there was deals already there, and the camel's back has already been broken in 2009, 2019. I saw it, and that's why I came to my YouTube channel like, dude, this is the best time ever to be a real estate investor. Where in 2016, I said this is the worst time to be a real estate investor. Good question, though. You guys have any questions? Leave a comment. I'll be happy to answer for you. All right. I feel like the housing market will fall within definitely by by affected by tsunami. What are your thoughts on the market being affected by Sugama? I don't know what Sugama is. Sugama balls. I don't know, man. Maybe I can't spell. So uh, so maybe I can't read it correctly. But what are your thoughts about the effect of this? I'm not sure what that word is, but guys, one thing I can tell you is that the market was going to crash regardless of this bug or not. I think this bug is just a cover up. We're going to have a different world currency. The petrodollar is in the free fall. We have so much debt, and more countries are not going to believe into the dollar, unfortunately, and it's going to be massive pain and suffering for the American people because the luxuries that we have in America, like literally, I don't know if you guys ever traveled to a third world countries or if you guys ever traveled to other countries. We have so much luxuries here. Like we have everything, we haven't paid for it. Let me say that again. We have everything and we haven't paid for it. Other countries, you got to pay for it first before you can get it. So that's going to change as we lose the world reserve currency. And we've been massive taxing, we've had massive Big Brother's been growing, and they have more departments and more ABC depart groups, and we pay for that. So I like freedoms, I like liberty, and I don't like Big Brother just growing and growing and growing, because when Big Brother is the number one employee of America, then we are big trouble, right? I rather have corporations, the small companies have more workers than Big Brother, and when Big Brother becomes the leading employer, well, that doesn't seem like a free market to me. So I hope that answers your question, guys. Before I forget, guys, go check out MrNoFluff.com. We only have 22 or 23 left of that profit sharing pre-recording. It's revolutionary. It's going to change your life. It's going to show you how to buy houses, owner financing, how to buy houses subject to, how to use creative real estate investing, where you don't have to go to a bank. You don't need an agent. It shows you exactly how to find these sellers, how to talk to them, how to structure deals. More importantly, it's like a mastermind with a bunch of different students, and you get to listen to them doing their deals, which is worth gold, ladies and gentlemen. It's worth gold. Okay, and you get it for $200, less than $200 versus the 3 grand, ladies and gentlemen. So go check it out, MrNoFluff.com. All right, any more questions before I get out of here? The balls. All right, man. Thanks for watching. Peace.